Capital expenditures and operating expenditures. Capital expenditures and operating expenditures are two categories of business expenses that organizations incur with distinct characteristics, implications, and accounting treatments. Understanding the differences and strategic importance of Capex and Opex is crucial for effective financial management and long-term planning. Here, we will delve deeply into each type of expenditure. 1. Capital expenditures. Definition and characteristics. Capital expenditures refer to funds used by a company to acquire, upgrade, and maintain physical assets such as property, plants, technology, or equipment. Capex is typically associated with investments in assets that have a useful life extending beyond the taxable year. Accounting treatment. Capex is not fully expensed in the year of purchase. Instead, it is capitalized and amortized or depreciated over the life of the asset. This treatment reflects the asset's usage and wear and tear over several years. Strategic importance. Capital expenditures are crucial for long-term growth and efficiency. Investments in Capex can lead to increased production capacity, reduced operational costs, and enhanced competitive advantage through improved technology and infrastructure. Examples: constructing a new factory, purchasing machinery, upgrading computer systems, buying vehicles for business use, or investing in significant software upgrades. Decision-making and budgeting. Capex decisions often involve significant amounts of money and require rigorous planning, forecasting, and approval processes. They are typically planned and budgeted for in advance, with considerations for the strategic direction of the business and expected returns on investment. Benefits and risks. The benefits of Capex include potential tax benefits through depreciation deductions, improved operational efficiency, and increased asset value. However, the risks involve significant upfront costs, potential obsolescence of technology, and the uncertainty of expected returns. 2. Operating expenditures. Definition and characteristics. Operating expenditures are the ongoing costs for running a product, business, or system. Unlike Capex, Opex refers to expenses that are necessary for the day-to-day functioning of the business and are expensed in the accounting period during which they are incurred. Accounting treatment. Opex is fully deductible in the year they are incurred, directly affecting the company's profit and loss statement. This includes costs such as rent, utilities, and salaries expenses that do not directly result in the creation of long-term capital assets. Strategic importance. Operating expenditures are critical for the maintenance of smooth operational flow and are essential for ensuring that businesses can continue their routine functions without disruptions. Examples: wages, rent, utilities, maintenance and repairs, and costs associated with the administration of the business. Decision-making and budgeting. Opex requires effective management to ensure efficiency and control over costs. These expenses need ongoing monitoring and evaluation to ensure they do not spiral out of control and impact profitability. Benefits and risks. The primary benefit of properly managed Opex is the potential for flexible management and adjustment according to business conditions. On the downside, excessive Opex can reduce cash flow and profitability. Comparing Capex and Opex. Impact on cash flow. Capex typically involves large lump sum amounts that might impact cash flow significantly. In contrast, Opex usually involves smaller, more predictable expenses spread over time. Tax implications. Capex cannot be entirely deducted in the year of purchase, whereas Opex can be fully deducted, providing immediate tax relief. Effect on financial metrics. Capex affects assets and depreciation on the balance sheet and can enhance future earnings potential, whereas Opex affects the income statement immediately and reduces net income. Strategic flexibility. While Capex can constrain financial flexibility due to its substantial and often inflexible nature, Opex generally offers more adaptability, especially in changing economic conditions. Planning and forecasting. Capex requires more rigorous strategic planning as it impacts the company's long-term capabilities and growth. Opex, while also requiring planning, is more about maintaining operational effectiveness and efficiency on a day-to-day basis. Example in a business context. Imagine a tech company. The Capex could involve the costs associated with acquiring a new office building and purchasing new servers, whereas the Opex would cover costs like cloud services fees, employee salaries, and office supplies. Strategic management of both Capex and Opex is essential to ensure the tech company can innovate and compete effectively while maintaining smooth daily operations. Conclusion. The management of Capex and Opex is fundamental to corporate finance and requires strategic insight to align with the company's overall financial and operational goals. Effective management of these expenditures not only ensures fiscal health and operational efficiency but also supports strategic initiatives and long-term business sustainability. Understanding the nuances of Capex and Opex helps companies make informed decisions that balance immediate operational needs with long-term strategic goals. Useful expressions. To align with our long-term growth objectives, we need to increase our Capex investment in new technologies that drive operational efficiency and competitive advantage. This year, our focus will be on managing Opex more efficiently to improve our EBITDA margins without compromising on the quality of our services. Our Capex for the upcoming fiscal year will prioritize expanding our production capacity, which is essential for meeting the forecasted increase in demand. We should consider transitioning some of our Capex to Opex by leasing equipment instead of purchasing it outright, to preserve cash flow and increase financial flexibility. A significant portion of this year's increased Capex was directed towards upgrading our IT infrastructure to support remote work capabilities and data security enhancements. Effective management of our Opex, particularly in marketing and sales, has allowed us to improve operational efficiencies and achieve a lower cost-to-income ratio. Our strategic allocation of Capex has positioned us to capitalize on emerging market trends and sustain our competitive edge. By maintaining rigorous control over Opex, we have enhanced our operational agility and are better prepared to adapt to market changes. The recent Capex in advanced manufacturing equipment is a testament to our commitment to innovation and excellence in production. Our team has done an excellent job this quarter in optimizing Opex across departments, ensuring that we maximize resource utilization and cost efficiency. Implementing this new project will require an upfront Capex investment, which is projected to result in significant cost savings and operational efficiencies over the next 5 years. The ongoing Opex for maintaining the new system will be offset by the reduction in manual processing costs and improved workflow efficiencies. We need to review our Capex commitments regularly to ensure they are generating the expected returns and aligning with our strategic priorities. It's critical that we keep a close eye on Opex trends to prevent any potential overruns that could impact our profitability. Let's ensure that our Capex projects are progressing according to schedule and delivering the benefits we anticipated in our initial projections. Continuous monitoring of Opex is essential, especially in areas like customer support and IT, where unexpected costs can quickly escalate. Our disciplined approach to Capex has enabled us to undertake several transformative projects this year, which will drive sustainable growth and shareholder value. We are committed to maintaining stringent OPEX controls to ensure that our operations remain lean and efficient, even as we scale. Given the rapid technological advancements in our industry, we are reallocating a higher percentage of our budget towards Capex to ensure we remain on the cutting edge. Controlling our OPEX in the short term is crucial for sustaining operations and funding strategic capital investments in the future. This quarter, our Capex was primarily focused on acquiring new facilities to support our expanding operations and increase our production capacity. We've managed to reduce our OPEX through strategic outsourcing and optimizing our supply chain processes, which has positively impacted our operating margins. We propose a substantial increase in Capex for the next fiscal year to fund our expansion into new markets, which aligns with our strategic vision for growth. Our ongoing efforts to streamline operations have led to a noticeable reduction in OPEX, enhancing our profitability and operational efficiency. The team needs to prioritize Capex projects that offer the most significant long-term benefits to our core business areas. Regular reviews of our OPEX spending have been scheduled to ensure all expenses align with our current strategic goals and operational necessities. Project teams must submit detailed Capex requests with clear ROI projections to ensure funds are allocated to high-impact projects. Let's focus on minimizing OPEX without compromising the quality of our deliverables to maintain competitive pricing and profitability. Investing Capex in digital marketing tools will provide us with advanced analytics capabilities, enhancing our ability to target and engage potential customers effectively. By keeping our OPEX in check, particularly in client acquisition costs, we can increase our marketing spend efficiency and drive higher conversion rates. Managing our OPEX wisely helps us sustain a stable working environment and secure funds for employee growth initiatives and rewards. New procedures for approving Capex expenditures will ensure that all investments are evaluated thoroughly and aligned with our strategic framework. We've implemented tighter controls over OPEX spending to prevent budget overruns and ensure financial discipline across all departments. Understanding the distinction between Capex and OPEX is crucial for all team members to make informed decisions about expenses and budget management. Our strategic Capex investments in renewable energy sources not only reduce our carbon footprint but also decrease long-term operational costs, increasing shareholder value. Efforts to optimize OPEX are reflected in our improved cash flow, which we plan to reinvest in key growth areas of the business.